Come back. Come back to your seat.
I heard about some ideas that you have to
Hello everyone, can I proceed? Hello? Hello everyone. Hi, come on, can I proceed? Okay. We were just talking about the balance sheet, so let me expedite the elaboration for the remaining two reports. One is cash flow. Please flash the button cash flow. So you got a number. The last financial cash flow report is I made 2.6 million revenue for the company. Okay, the revenue in is about 2.68 million revenue. Okay, and I don't go into the detail for the report, but you got the cash flow report here. And the last one is the income statement, which is very important to your decision. And also, I don't go into detail for the explanation for the income statement, but there are two factors I need to tell you. The first one is the labor cost. You see the labor cost here, and the labor cost is for per unit. The labor is 1.4. Around 1.4 US dollars. Why this factor is important? Because when you are thinking about the production decision, as I just mentioned, if you decide to maximize the production quantity by OT, by overtime, the quantity, the OT quantity is must suffer from higher cost. The cost is the normal cost plus 50% of the labor cost. Get it? So if the unit are the OT unit, the cost is normal cost plus 50% of the 1.4 US dollars. The regular cost is about 3 US dollars, right, for finished product. But if the OT unit is about 3.7. So this is very important when you do the pricing strategy, because you have to cover the higher expense when you are maximizing the production. Okay, this is the first factor I need to explain in income statement. The second one is this raw material consumption. You see a parenthesis there. There's a conversion rate 0.688. This is a very, very important factor regarding the production policy. The definition of this factor is in the production line, when you throw 1,000 pieces of raw material, there will be 688 finished product come out. This factor defines the relation between raw material and finished product. We use it as a conversion rate.
So it's the yield. Is it the yield?
Yes, yield rate. Yes. Don't mix this factor with failure rate. So this 0.688 is the conversion rate, which defines the relation between raw material and the finished product. It's nothing to do with failure rate. If the failure rate is 31.2%, that will be too high. So it's nothing to do with failure rate. Okay. When we talk about the conversion rate, please go with me and get back to the status report. There is one column missing. I did that on purpose. This is called the raw material stock. Half an hour ago, when I explained this table, I didn't mention anything about the raw material stock. But after I introduced the conversion rate, let's get back to this. The moment I give the company to you, I'm giving you a lot of cash, 1.2 billion, a million cash. I give you over 1 million pieces of raw material. And when you see the raw material, you got 1.118 pieces of raw material in your hand, and now you know the conversion rate. Can you estimate the equivalent production capacity for finished product?
700.
Use this number times the then current conversion rate is the what we call the equivalent production amount or capacity. You know what I mean? Can you help me to estimate roughly about the number?
780,000.
700, around 800,000?
Yeah.
Okay. Remember, just now,
Sure. It's
around,
it's 81. I think it's 81,000.
Isn't it 6?
81,000.
yeah, around something like that.
81,000.
Yeah. There were two factors I asked for your help for a rough estimation. One is the maximum capacity. The other one is the equivalent production capacity from a raw material. Why I'm saying this? Because there's one very important decision is on production plan. So when later on you make the decision on production plan, there are two factors that should exist simultaneously. One is you need to have enough production capacity. The second one is you need to have enough material. So you got two numbers now. The maximum production capacity is over 600,000 around, and the equivalent production capacity for the material is over 800,000. So tell me, what is the exact number if sales is very high, and what is the maximum number that our production department can provide?
600.
6 instead of 8, right?
Yeah.
Okay. Remember, the production plan needs to consider two factors. One is the maximum capacity. The other one is the conversion rate.
And we don't need to worry about labors, right?
No, you have to.
Sufficient labors? We have sufficient labors?
Oh, okay, labor for labor, yes,
Okay.
yes. Just focus on labor conversion rate. But why I keep saying this, because I have so many experiences in the past year that people, management always forgot to procure, to buy material, because they say the capacity is enough. The production capacity is enough, so we don't need to buy material. The statement is not true, right? Because these are different factors. Okay? Okay. Okay, let's go to the decision and make decision. I just gave you a lot of information which I believe that it might be very difficult for you to remember that. It's fine. Let's do that in later practice.
I'm
But
sorry, can we go back to the earlier, the slide?
Status report.
okay, status report.
I just have one quick question.
Oh yes, okay.
About that production there, what do you mean by that? That's the production I want to produce?
You mean
That's
No,
the different of capacity, the production.
Production.
30.
Oh, this is the past record. This is the past record. For example, we are at the end of Q4, right? So this is the exact number that the product was produced in Q4. This is the past record,
Okay,
only for reference. And this is the number that you can use now.
I can use that.
Yes. Yes.
For this decision,
Yeah, for this decision, this coming decision, we are making spring decision, right? Okay?
Yeah.
Okay, let's go to decision and make decision. You have 18 decisions to make at this moment. Separately, there are 4 markets. For each market, you have to make the decision of the selling price. You have to decide how much marketing funding to be invested in the market. You have to decide the production request. What I'm saying, the production request actually refers to sales forecast. Okay, so two limitations. The price shall fall between $3 and $9. You couldn't set any price below $3 because it's money losing. It's totally against the main purpose of business. Running business is to make money, so any price below $3 is prohibited. The system won't allow to go. And you can't make any price higher than $9 because there won't be any customer need. So do remember the price range must fall between $3 to $9 US. So you can't compete, you can't sell the absolute high price. The implication is don't make absolute high quality. You know what I mean? Because You cannot sell absolute high price. The price must be in between $3 to $9. Okay? And also, yes?
The street, between the street to 9, how about like a 6.57? So okay?
Okay, we can have 2 digits.
Okay, the most
In
the
decimal.
maximum is 2 decimal.
Yeah. Even you want to drop some market, you still have to set a price. You still have to put a price there, even you don't want this market. If you don't want this market, you just put the production unit to 0. But you still have to set a price there. Okay? Okay, for the production, this one is very important. For production, actually means the production request. You have to consider about the inventory. Any number written here will be transmitted to production site and will be produced, subject to capacity. If the capacity allowed, then will the production manager will try best to provide the unit you want. So in foreign market, the total lump sum of the foreign market production request shall not exceed the maximum production capacity. Remember that at the very beginning you got over 600,000, around 600,000 maximum capacity unit. So even the summation or the total number of this foreign market is about 800,000 is useless. It will be allocated in proportion. So it's of no use to write any number higher than the maximum production capacity. So do remember that your business is subject to limited quantity supply in this. And also, because the factory is in the north, so there will be no freight in north market. But when you ship any certain number quantity to central market, the freight will be $0.1 US, and it will be $0.2 US to the south market, and $0.8 to overseas market. This means when you are doing business in overseas, the cost is very high. Be careful about the pricing. Do remember to cover the profit. The freight, the shipping expense is very high in overseas market. Okay, 0 in north market, 0.1 in central market, 0.2 in south market, 0.8 in overseas market. Okay, and you can make your own decision about the investment level, the maintenance level, but this part is very important. Equipment. Do you remember that each one of you will suffer from 2.5% production depreciation?
Yes.
That means if you don't expand the second planet or third planet, the quantity you can provide to the market will be lower and lower after each quarter. So system provides you one alternative. You can invest for a new planet, new production planet. But the requirement is for each unit, it will take you $20 US for each unit. If you want to expand the second production line to 100,000 unit, taking for example, how much do we have to invest in this? $20 for 1 unit capacity. So if I want to have second planet, the second production for 100,000 units, how much should I invest? 2 million. $20 for 1 unit. This is a big number, right? Do I have to say that again? This is a very important factor. If you want to...
Okay.
Do I have to explain again?
Yes.
Okay. We have 2 strategies. If you are winning, if you try to win by quantity, saying something like cost leadership in Michael Porter's term, cost leadership. Actually, it is a strategy of Q, of quantity. If you want to win, the business model will be low price, high quantity, right? So the key success factor of this strategy is you should have enough quantity. So you have to deal the problem, the challenge for quantity. And also you know that after each quarter, our production capacity will drop 2.5% every quarter, no matter how you spend money on maintenance. So you have to deal. This is one alternative for you. If you want to deal with quantity, you have an alternative to set up the second production line or third production line. For each production line, this is called investment, capital investment in accounting term. This is a long-term investment, $20 per unit. So your first production line is currently what you have, 429,000, right? Remember 429,000, 429,000. The status. This is your production line 1, which is currently you are only running for in your factory. If this capacity is not enough for your strategy, if you want to run the quantitative strategy, you may need to consider whether you need to set up the second production line. If you want to do so, this is called capital investment, which is a long-term investment. The requirement will be $20 for each unit. That means, for example, if you want your production line 2, the second production line, be 100,000 unit, then you should spend $2 million, which is a very heavy investment compared with your assets now. Okay? But at least the system provides you an alternative for this production. Yes?
Is there a minimum quantity requirement for the next investment?
Actually, no in system. But
so we can increase capacity for like 1 unit to any number?
Yes, if from system aspect, no limitation. But from business aspect, it doesn't make sense.
Right.
Okay, so please make it make sense. Okay, okay.
Just like get passive.
Yes.
Question here?
Yes.
Question here.
Oh, yes.
We don't want to spend on increasing capacity. Is it an option?
Sure. Okay. Okay. To deal with quantity issue, you have 3 ways to go. First, remain the current capacity at normal price. Secondly, you OT. You use OT, but the maximum capacity is 50% of the then current capacity you have. The third one is to, for the capital investment. So, if you look at the business as a good business in long term, you should consider long-term investment. If you think it's just about seasonal up and down, you dare not to spend a long-term investment, it's up to you, then you use OT. Or, if you have different strategy, like Michael Porter said, well, not everyone is going through cost leadership. You can go differentiation strategy. Your strategy will be high price and lower quantity, right? Where that case, the quantity is not an issue. You should spend all your money and focus on how to raise your quality to get a higher price. This is totally different strategy on the other side of the spectrum. It's all at your discretion. Okay, let's get back to the decision. Sorry. Are there too many factors to remember? I believe so.
Well, actually, just play once.
Yes. Okay. If you want to do make the decision for making the second or third production line, do remember it takes time. So there will be one period time lag. That means if you make the decision in Q1, you can only use the new capacity in Q2, because it takes time to build out the plant. And also, for the raw material procurement, it will also take 1 quarter lead time because it is from outside. So remember, there are 2 decision factors that will take 1 quarter lead time. One is the build up for second production line. The other one is the procurement of raw material. Besides these 2 factors, every decision will take effect immediately in this quarter. Either price or marketing or maintenance or R&D for product quality. Okay. Okay. Lastly, I have to remind you that there is possibility for you to go bankrupt.
question.
Oh, yes, before go bankrupt.
Purchase quantity, is it for this quarter or for next quarter?
Next quarter. Actually, it's the shipment will arrive at the last day of the quarter. So
Okay,
you
so
can,
we are making decision for next quarter.
yes. So if you don't make any decision to buy raw material, trust me, it will be a disaster. Because no raw material means no production. No production means empty line in the upper part of the income statement. You have no production means you have no sales. When you have no sales, your upper part of the income statement is terrible. Everything on the lower side of the income statement is terrible.
Okay, sorry, just to make sure I understand that part, the purchase quantity. If we are making decision for the spring quarter, when we make the purchase quantity, is it coming at the end of spring or coming at the end of this quarter?
It will come in at end of this quarter.
Okay, so it's for spring production.
Yes.
Okay.
No. If you make any decision, write any number here for buying any quantity of raw material. This material can only be available for production at next quarter.
So it's not spring.
It's not spring. Yes.
For next quarter.
Okay.
Later on, we will be making spring decision. But whatever quantity you say, you mentioned here, this quantity will only arrive at the end of the quarter and only be available in next quarter. So nothing to do with current decision.
Okay.
You can't use any quantity here. Okay? Yeah, do remember that there is possibility you go bankrupt. Please go back to the balance sheet. The debt ratio. You know, you have a liability of 4 million now. You know, the ratio between your liability and shareholders' equity. You have to look at the debt ratio anytime. If the ratio reach 10, you will go bankrupt. It is totally out of practice. In daily business practice, the number is 1. But you know, for the system, we allowed you to go 10. The only purpose is to avoid, too easy to go bankrupt. But please don't make any decision like other people do. When they know the number 10, they will check the number of the current liability and make it 8 or 7, for example. For example, we got 4 million normal debt to the bank. So people will say, okay, 10 is the upper limit, so why don't we borrow 8 times for 30 million? And borrow money first and then think about how to use the money. This is totally wrong logic. Please don't do that. Okay? Okay. Yes?
We cannot do that?
Yes, you can, but I won't suggest that it's not the appropriate thinking logic. You should do business based upon how much money we need instead of how much money we borrow from the bank.
Okay. And when you
Yeah.
say 10 is in the ratio?
Yeah, 10, the ratio 10.
So
When the
that
ratio
means
reach 10, you will go
11
bankrupt.
million. You mean 11 million? 11.1 million, you will go bankrupt.
Yeah, when the number, the total liability over the shareholders' equity reaches 10, you'll go bankrupt. Normally, the ratio is 1
Okay.
in real
This
practice.
is not even 1, it's already more than
Yes,
1.
yes, please say
For
for you.
example, suppose in this balance sheet, your liability right now, suppose it's like 71 billion, then you go bankrupt.
Yeah. Currently, it's less than 0.6,
Uh-huh.
which is pretty safe. But I'm just warning, don't make any decision in the thinking logic like this. Making a 10-fold or a 7-fold of the current liability and borrow the money from the bank and start thinking about how to use the money. Don't think that way. It's totally wrong. Okay. All right. I just gave you a quick glance of the rule, and I believe that it might be too many for you. It's okay when you run once, you will remember all. But I'm giving you a PowerPoint presentation slides like this, and actually come back to the topic for today's main topic, MBO. We call that management by objective. This is the real what we are saying, doing in the game. We are using the factor called SIREN, S-I-R-E-N, which is a 5-factor showing market share, inventory, revenue, expense, and net profit. You can check this 5 index in various reports. Currently, when you take over the plan, when you take over the company, I'm giving you got 12.5% market share, you got 4.5% of the inventory rate. I'm talking about ending inventory, end of the period. And also the revenue is 2.69 million for last quarter and 12 million for the past whole year. And also the 35.07% of expense rate with 159,000 net profit. This is the current exact number I give you when I give you the company. And
every company will be exactly the same.
Everyone the same. And your job, not even on the next practice or for later courses, you set the annual target, you set a Q1 target, and finally, we have enough time for the consecutive 3 to 4 weeks. You should have this: Q1, Q4, 2, Q4, Q4. Plan actual. For every quarter, you set a goal, and you run the business, and things will not go exactly what you would expect from your target because of competition. So when you go through the over 4 quarters in a year, compare the difference. And I'm giving you a PowerPoint slide like this.
That also I'm giving it to you because you are going to make a final presentation and see what happened for the whole process. Follow this schedule here.
Yes, this is a template. Whatever company, group 1.
Sorry, the presentation, is it before the midterm or after?
After the midterm.
Okay.
I'll tell you when you make the decision.
Okay, thank you.
Okay, and then your company profile, your management team, and this is the data. You should take note of every number after every execution of every term. Okay, and then you should have a business review table like this. I'm sorry I put it in Mandarin, but you can easily convert it into English. This is the plan, the salary index, and this is the target, annual goal, and this is the actual achievement. Tell me about the difference and explain why there is a difference. And show me your strategy during the 4 or 5 or any period, 6 period of competition. And tell everyone, what is the best decision you have made during the competition? What is the terrible, what is the worst decision you have made during the competition? Yeah, and this is the...
Like this table, can you give me the blank one?
Okay.
Yes.
Question.
This is one I want you to have one to compare with your annual goal and your achievement and difference, because that's your annual goal is your plan, and their achievements is your actual, what number you get here, and what's the difference, and why this happened here. And here's one, you have a different plan for this year. There's the 5 big decisions. What is my market share? Suppose everyone starting from the remember one is 12.5%, right?
Right.
So my goal is 20%. But what happened? Maybe the end of the year you get only like 10%. What happened? Tell me. Here, and also you write down your implementation. What you have done to make the decision. What is my investment? And also tell me what is the best decision you have ever done. This is the best here. And what you have need to be improved. Like he made an example, like we supposed to give up the foreign market, but we give up too slow. So that's what happened. If we give up earlier, it's better. So this make your decision to tell me what's happened. Then this is your final report based on your the whole period and what has happened in the different season here. So that's the format, and I'll give you to you. Put in the internet. You get this format here. Okay.
Yes, and in addition to the number analysis, you should also tell Professor Lin or every classmate about your strategy like this. For example, what is your strategy to sum up and all the past strategy you have learned. For example, this is what we say. If I want to implement cost leadership strategy, and I believe key success factor is volume. And to make sure the volume, I have to overall cover every market to sustain the market.
Example.
Yeah, the sample, and what is the 4P strategy: product, pricing, promotion, channel, like this. And this is the verbal or conceptual strategy in addition to the number. And this is also included in the presentation, which will be everyone will be your homework for the courses. Okay, and I will be providing this sample, the template, to Professor Lee. So Professor Lee will share with everyone. Okay. Yes.
We also include the information about the costs. For example, the freight cost. So, I mean, even though we took the notes down, but do you have the details?
Yes. I'm also providing you a PDF file showing the very detailed in 15 pages of every game rule in this game. All right?
That's already included in your internet web page.
Okay. So you will have a empty template in PowerPoint format. You will have a full PDF file for the implementation operation dial on this. Okay. 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 Everyone. I think it's about time for us to hands-on the practice. And because the time is limited, can I propose we just get back to your decision table and just relax to only for practice purpose. We make the decision within 20 minutes. This is also just a quick practice. And we run through the whole process. We make the decision within 20 minutes, and after the 20 minutes, you fill the gap.
Fill the table here.
Yeah.
So your pricing decision and your investment decision, R&D decision, maintenance, everything here was the numbers, because we want to run for the one season, and you can see the result, and you can make a little explanation what happened. Just for practice.
Yes. Yes. So so the time is very limited. For now, we will end up the discussion and submit the decision in 9:40.
9:40.
9:40. Can we?
So we have to make the
Is
first.
this a test run? It doesn't.
Yeah, this is
It's only a test run.
It is a test run.
I just want to see the whole process.
Yes, the test run. After you finish the test run, we'll clear everything and restart again.
Okay.
That is a real run start.
Yes, yes. This is only a pilot run. Yes. Excuse me. Okay. This is okay. Everyone, you can start with your own discussion, but I'm going to answer your question.
Go to your page, your number like this is the unit price. That's your equal number. Everyone was starting to